You're watching Silver News Daily. Subscribe for more.
Well, look, we see things happening in the gold and silver market now that we've never seen before. And I think it's something that we should be very cognizant of. The basic premise is that central banks and institutions and I don't know, family offices, sovereign wealth funds, they're more concerned now about amassing real physical bullion than anything else. And the target of all of this seems to be the LBMA more than anything. We've talked at length about how the LBMA has, in essence, a float and has had a float that's been relatively stable in silver for quite some time, of about 290 million ounces that is trading off of roughly 2.9 billion ounces per day of paper trading, or 3.5 times annual global mine supply, or 10 times the amount of silver behind it. In other words, the paper to physical is 90% paper to physical. That's what the Hunt brothers saw in 1980. More paper, less physical, and so they exploited it. Well, since November, when the U.S. has become a net importer of gold, quietly, the same thing is happening with silver. It hasn't really been publicized quite as much, but we saw over 70 million ounces of silver leave the LBMA in January. That's an all-time monthly record, or about 20% of the float. There's only about 270 million ounces that remain that are not encumbered. So in other words, there's about 780 million ounces total, of which only 270 of those million ounces, 270 million ounces of the just under 800 million are available. The rest are encumbered, belong to ETFs or the Bank of England or who knows who. But
silver is standing at the edge of a financial earthquake, and almost no one is paying attention. The vaults of the LBMA are draining at an unprecedented rate. Comex is buckling under the weight of massive paper silver contracts. The whispers of Silver Squeeze 2.0 are growing louder, and the entire system is being pushed to the brink. But what does this mean for you? You unsit. The last time we saw a silver squeeze, the price spiked almost overnight. But this time, the forces at play are even bigger. Central banks are hoarding gold. Brics nations are accelerating de-dollarization. Industrial demand for silver is exploding, and the supply deficit is getting worse by the day. The mainstream media won't talk about it. The institutions don't want you to see it. But the warning signs are flashing. This is the most dangerous market for silver investors in history. And if the dominoes fall the way they're lining up right now, silver could be headed for one of the most explosive moves we've ever seen. So what's really happening behind closed doors? How bad is the supply crisis? And what happens when the inevitable short squeeze begins? Stay with me, because by the end of this, you'll understand exactly why silver prices may be on the verge of a historic breakout. If you're ready, let's get into it.
Done again. Tom Luongo is a smart dude, and he's talked about this for a while. There is a rumor, and I can't substantiate it, but since we're talking rumors, let's talk rumors. The rumor is that, yes, that is what he's trying to do. Started with Powell, and the rumor is even that they're in cahoots, Powell and Trump, even though they don't appear to be. And it started with Powell changing the interest rate structure from LIBOR to SOFR. And that was a shot across the bow. The rumor is that it's the aristocrats from the old European aristocrats that are responsible for like the color revolution that we're seeing here, or that we saw over the last 4 years. They call it a color revolution. You could argue it is. I mean, the stuff that we saw so far departed from, the American ideals that Trump is trying to restore, that they were actually behind any election in loss of integrity. I don't want to say that the election was rigged in 2016, although it had certainly the hallmarks of it not being fair. And, if I were being honest, having a beer, I might say that it certainly wasn't fair, trying to be a little bit more impartial. But the bottom line is he believes it was, and that they are behind it. And this is how he's getting back at them. And that the rumor is that the banks here in the U.S. have gone long, and the banks over there are massively short. And it's a scramble. It's an existential threat. Will bring down could very well bring down the Bank of England, could very well bring down some of those institutions. That is a rumor, and I've heard it. And I guess to a degree, if someone has to fall on the sword for all of this, I think he probably said, look, you're beginning to see this right now. The comment out of Deutsche Bank. Let me just read you this comment out of Deutsche Bank, if I can find it, because here it is right here. Who is he? George Sorolovitz, I can't pronounce his name, the bank's global head of FX strategy, Forex strategy, in a note to his clients. He says the US dollar may lose its traditional safe haven status as global markets adjust to a new geopolitical order, according to Deutsche Bank AG. We do not write this lightly, but the speed and scale of global shifts is so rapid, it needs to be acknowledged. He goes down to say, and this is kind of what it's getting at, you notice that they say we don't need the American protection anymore, we'll do it ourselves. Well, two pillars of America's role in the world are being fundamentally challenged: the US security backstop for Europe and the respect of rules-based free trade. So it appears as though that actually could be a possibility. It's not going to announce it that way. But yeah, I mean, if you see a failure to deliver on the LBMA, look, you could argue we're already seeing that.
The silver market is being drained at an unprecedented pace, and nowhere is this more evident than the vaults of the London Bullion Market Association. For decades, the LBMA has been the backbone of the global silver supply, holding vast reserves that institutions, central banks, and industrial players rely on. But now, those vaults are emptying fast. Just last year, over 300 million ounces of silver disappeared from LBMA storage. That's not speculation, it's a fact. Official reports show that inventories are at their lowest levels in years, and the trend is accelerating. The question is, where is all this silver going? The answer is simple: out of Western financial hubs and into the hands of those who see what's coming. Nations like China, India, and Russia have been aggressively buying up precious metals, shifting their reserves away from the US dollar. Central banks have already set records with gold purchases, and silver is quietly following the same path. Industrial demand is also eating into the supply at an alarming rate, with solar panels, electric vehicles, and electronics manufacturers requiring more silver than ever before. The problem? Unlike gold, silver is consumed. Once it's used in industrial applications, it rarely comes back to the market. And as demand rises while LBMA vaults continue to shrink, the pressure on prices is only building. The cracks in the system are forming, and soon the world may wake up to the reality that there's far less available silver than the market assumes. So what happens when investors realize the supply is drying up? And how does this tie into the chaos unfolding at Comex? Stay with me, because the deeper we dig, the more this story reveals just how fragile the entire silver market has become.
And who has wanted to, she's concerned about the safety of the Comex market. And I guess I understand that after all the things that we've seen. And she has quite a few Comex 1,000-ounce bars in a Comex depository. We have nine Brics vaults around North America, as you know, Dunnigan, and one of them is in New York City, JFK. It's the only one of our Brics vaults that is a Comex registered vault. The bid prices on the 1,000-ounce bars are higher than I can really maybe even at any time remember, or they have been. I haven't checked them today, but they've been elevated. Much higher than they were when times were normal, because there is a shortage of those bars. Those bars are becoming harder and harder to get. And, you wouldn't know this because the retail side of things has been muted and well evidenced. Premiums haven't spiked again, although starting to climb a little bit on the Eagles. There are companies out there that are selling maples much higher than Eagles right now because of the tariffs. We were able to stock up on them leading up to it, but there is a tariff in place on silver maples as well. The point of it is that on those bars, there is a shortage. The banks who are naked short, these traders who are naked short on Comex, the term rehypothecation, are nervous that what always was a cash settle is now turning into, I don't trust it, I want the real thing, thank you very much. And they're scrambling to get it. Otherwise, they will be forced to cover at some point into a rising market, which is a very dangerous thing. So I've always said something that people just probably went in one ear and out the other, and that is you can only successfully manipulate a market for extended period of time by pushing in the direction it's going. Well, that's true. When no one stands for delivery, you can be Bernie Madoff and you can run a fractional system that is massively rehypothecated. That is, in essence, a Ponzi scheme. But wait, when people say, Bernie, I need my money, well, then there's a problem. And that's kind of what is being said across the board. Now, I don't know how the Comex figures into all of this. Is the Comex
The cracks in the LBMA vaults are only half the story. The real chaos is brewing at the Comex, where paper silver contracts outnumber physical silver by an alarming margin. For years, Comex has operated as a fractional reserve system, trading massive amounts of silver on paper while holding only a fraction of the physical metal to back it up. But now, that system is being pushed to the limit. Right now, for every physical ounce of silver in Comex vaults, there are nearly 500 paper claims against it. Let that sink in. If just a fraction of those contract holders demanded delivery, there wouldn't be nearly enough silver to go around. And here's where it gets dangerous. Many of the biggest players in the market are starting to lose confidence in Comex's ability to deliver. In recent months, we've seen a record number of contracts standing for physical delivery instead of rolling over into new paper contracts. This is a major red flag. It means that large investors, institutions, and sovereign players are no longer trusting the system. They want the real metal in their hands, and Comex is struggling to meet those demands. The result? Comex is being drained just like the LBMA. Official reports show that registered silver inventories, the portion of silver actually available for delivery, have been falling sharply. If this trend continues, we could be headed for a moment where Comex simply runs out of silver. At that point, the entire illusion of paper silver pricing could shatter overnight. The last time silver faced a serious short squeeze, it shot up nearly 50% in weeks. But this time, the supply constraints are worse, demand is higher, and confidence in the system is crumbling. The question now is, who is behind this move for physical silver? And why are they pulling their metal out of the system at record speeds? That answer lies in the growing movement away from paper assets and into tangible wealth. And as we'll see next, the demand for physical silver is only just beginning.
say there's a shortage of trucks and manpower when they've already delivered billions and billions and billions worth of gold before they figured out what was happening? I would argue they figured out what's happening. Originally, it was the Trump tariffs and the exchanging of exchange for physical, which is something that's happening all the time. And then it's like, wait a second, this is much deeper than that. So yeah, it could be a pushback and an attempt to blow up the Bank of England. I'm not saying it is, but there are prevailing rumors that suggest that.
John asked a related question. What happens if they can't deliver? Cash settlement?
That's not the way it's supposed to work on the LBMA. On Comex, yes. The LBMA is not an exchange. It's a peer-to-peer platform. And when we exchange certificates, or when I buy when one goes long, one goes short, the party that is long has absolutely the right to stand for delivery, and they are all delivery obligations. It's that most of them never really, not all of them, many of them would be cash settled. But yeah, it's different than it's an actual failure. And then the ramifications of that, it doesn't maybe not really blow up the exchange in and of itself, but the fear of that being systemic would blow up the exchange. So it would certainly blow up the reputation of one of the biggest commercial banks in the world, whichever one that is, Deutsche Bank or Standard Charter or UBS or whatever it is. So yes, it's a problem. On Comex, it's an exchange, and so there is force majeure cash settlements built into it. To my understanding, I believe I'm right on this, that's not part of the deal on the LBMA. You make a deal is a deal. Just like, you would expect peer-to-peer, there's no one to step in and cash settle, no exchange to come in and cash settle.
As Comex and LBMA vaults are being drained, a crucial shift is happening. Investors and institutions are waking up to the reality that paper silver isn't the same as physical silver. For decades, the market has been dominated by derivatives, ETFs, and futures contracts, all they trading silver in name only. But now, more investors than ever are demanding the real thing. Silver dealers are reporting record high premiums as retail investors scramble to get their hands on physical bars and coins. Supply chain disruptions, rising demand, and dwindling inventories mean that even when silver is available, it's far more expensive than the paper price suggests. This divergence between spot price and the price of actual silver is a warning sign that the paper market is losing credibility. At the institutional level, the shift is even more alarming. Industrial giants that rely on silver for manufacturing, tech companies, solar firms, and auto manufacturers are quietly securing long-term supply agreements to lock in metal before shortages worsen. In the past, these corporations relied on just-in-time inventory strategies, assuming silver would always be available. That's no longer the case. Meanwhile, central banks and sovereign funds are also making moves. While most headlines focus on their gold purchases, many of these same entities are accumulating silver, often through undisclosed channels. This buying pressure is tightening the supply further, making it clear that those in power see what's coming and are preparing accordingly. And then there's the retail investor movement. The same forces that triggered the first silver squeeze are back, and this time they're armed with more information, more capital, and a deeper understanding of how the system works. Social media forums, silver stacking communities, and independent analysts are exposing the flaws in the paper market, fueling a new wave of demand. But here's the key. This is not just a retail-driven phenomenon. The squeeze on physical silver is coming from all directions. Industrial buyers, institutional investors, central banks, and sovereign nations. They're all converging on one truth. Silver is undervalued, and the supply is running out. So what happens when this demand collides with the financial system's need to suppress silver prices? That's where the story gets even bigger, because the de-dollarization movement is accelerating, and silver is playing a critical role in what comes next.
Bottom line is that we're seeing silver come into the United States. In January, 2,586 tons have come in that we know of, which dwarfs for any single month, any month that I can ever remember seeing, at least in a very, very, very long time. And so whether we're talking about gold coming in or silver coming in, it's really the epicenter of all this is in London, and London's in trouble. You know, everyone's talking about how they were a T+1 settlement that's now gone to T+, 60, T+90. They're taking an inordinate amount of time to deliver the metal that they are required to be able to do so in just a matter of a couple of days. And everyone's been focusing on gold, but it's very important to realize that this is happening with silver as well. And so, we've seen a lot of the unwinding, or you will, the hedging of the positions, covering of the positions that are naked here with all the gold coming in. Perhaps that's why we've seen gold go up so much over the last several months, is that the American bullion banks were aware of what was coming. The European banks are still very much exposed. I don't think they've even begun to do this with silver yet. So all of those people waiting for that moonshot in silver, waiting for silver to catch up to gold's performance, maybe we're right there. Because with the Basel III implementation coming into effect, which really is about gold, I think they're kind of trying to shore up their books across the board, realizing that being naked short in an environment where the world is accumulating physical, where the world has lost trust, is really very dangerous as a mud wall. And I think that's something that is being recognized by the banks here in the U.S. As much as I almost choke on saying that, maybe they realize that this is an existential threat. And if they are going to let anyone fall on the sword, it looks like it will be those European banks that are part of the LBMA. This is getting very serious very quickly. And, to see the largest withdrawal ever out of the LBMA is something that people should stand up and take notice of.
As silver demand surges across industrial, institutional, and retail sectors, a larger force is reshaping the global financial system, the accelerating push for de-dollarization. For decades, the US dollar has reigned supreme as the world's reserve currency, backed by the promise of stability, military dominance, and the petrodollar system. But now that dominance is being challenged, and silver is playing a bigger role than most people realize. At the heart of this movement is Brics, the economic alliance of Brazil, Russia, India, China, and South Africa. These nations, along with their newly expanded members, are actively working to reduce their reliance on the dollar, shifting toward alternative payment systems and hard assets like gold and silver. In 2024, it says 2024 alone, Brics central banks purchased more gold than at any time in history, and silver accumulation is quietly following suit. Why? Because silver has always been a monetary metal, just like gold. While modern financial systems have tried to relegate silver to an industrial commodity, history tells a different story. Silver has been used as currency for thousands of years, and as confidence in fiat money declines. Harwin's looking to hedge against dollar instability or turning back to real assets. But here's where things get even more interesting. Brics is developing alternative financial infrastructures, from payment systems like Brics Pay to discussions about launching a new reserve currency backed by commodities. If silver is included in this equation, it could catapult demand to levels we've never seen before. At the same time, geopolitical tensions are accelerating the rush away from the dollar. Sanctions against Russia, tariff wars with China, and OPEC's pivot toward non-dollar oil trade are forcing countries to find new financial pathways. And with gold already skyrocketing, silver remains one of the last undervalued assets in this de-dollarization shift. The big question: what happens when silver is reintroduced as a monetary asset on the global stage? If BRICS nations and other emerging economies begin backing their trade and reserves with silver, the artificial suppression of silver's price in the West could finally break. And that's when the real chaos begins, because once that floodgate opens, retail investors, industrial buyers, and institutions will all be fighting over the same dwindling supply. So how does this tie into the growing retail silver movement and the return of Silver Squeeze 2.0? That's what we'll break down next.
That really is coming from Deutsche Bank. I think people need to understand that what the Bank of International Settlements did to the BRICS at the 12th hour, I think they've changed the way that they are going to be open and forthright about their developments. And I guess to me, de-dollarization is not stopping. In fact, net since 2014, there hasn't been any central bank buying of U.S. Treasuries. Net, they've all been sellers and buying things like gold. And certainly the unwinding of the Japanese carry trade is not going to be bullish for the U.S. and U.S. investments. And I think will only further incentivize de-dollarizing and getting away from the traditional things that they invested in. And all of these things are happening, but I don't think they're going to be as open about it. What I noticed that I figured was at least worth talking about is that you have a Russia, China, and Iran joint naval drill right now going on. And I think the shared interests of countering the U.S. influence, whether it be with the U.S. Navy militarily or on a broader sense, globally as a, this trend of moving away from the dollar and the hegemony and the influence is continuing. There will be things to talk about month over month, and there will be I believe, a emphasis on a Western slant on all the media reporting to make it look like it's nothing. But they are not ending their aspirations. And when you see joint naval exercises again between Russia, China, and Iran, that should carry a significance that people need to understand. That's, to me, their way of saying, no, we're not going away. Just because President Trump is here, we still have our agenda, and our agenda will continue. They think, and even the way Trump talked about recently here about, he was asked, I think, by Maria Bartiromo, and he says, yeah, we need to think more like China does. Instead of thinking quarter to quarter, we need to think in terms of 100 years. So that's the way that they think. And I think that they are continuing with.
While central banks and BRICS nations are quietly moving into silver, another force is gathering momentum: the return of retail investors. The same energy that fueled Silver Squeeze 1.0 is coming back, but this time it's stronger, more informed, and backed by even bigger market imbalances. Back in early 2021, a flood of retail investors, many from online forums like Wall Street Silver, began exposing the flaws in the silver market. They realized that for every real ounce of silver, There were hundreds of paper contracts floating around, and that a coordinated push for physical silver could break the system. The result? A massive spike in silver demand, bullion shortages across major dealers, and soaring premiums on physical silver. But unlike 2021, the conditions today are even more extreme. LBMA vaults are running dry. Comex is struggling to deliver physical silver. Industrial demand is at record highs. The Federal Reserve is battling inflation. And trust in the financial system is eroding. Retail investors are seeing these signals, and they aren't just stacking silver, they're preparing for a full-scale short squeeze. The movement is growing. Reddit forums, Twitter analysts, and independent financial channels are all sounding the alarm. Silver prices are artificially suppressed, and when the supply crunch truly hits, prices could explode. Dealers are already struggling to keep up with demand, with some reporting weeks-long delays and higher premiums than ever before. And here's the key difference this time. It's not just small investors anymore. Wealthy individuals, family offices, and even some hedge funds are quietly moving into silver, taking physical delivery instead of playing the paper game. This isn't just a retail-driven phenomenon. It's becoming a coordinated global shift out of paper assets and into real, tangible wealth. If Silver Squeeze 2.0 fully ignites, we could see a rush for silver unlike anything before. The more physical silver gets drained from the system, the more pressure builds on Comex and LBMA. And if those institutions fail to deliver metal, the entire illusion of price control could collapse overnight. But this isn't just about investor demand. The world is changing, and silver is no longer just a store of value. It's also a critical industrial metal, and shortages are about to get much, much worse.
And yet people aren't paying attention to what the farmers are doing any more than they're paying attention to what Comex is doing. And you listen to you or me, you might hear that. And again, you and I are the little boy who cries but look, these are very high stake games, man. These are big players that have got caught with their pants down. And they're trying to do all they can to eradicate themselves from a very dangerous position. And maybe that's why these rumors of someone has to fall on the sword. Well, it ain't going to be us, maybe Trump is saying. Maybe. Would you really put it past him right now? I wouldn't. The fact that we become net importers since November tells me he understands it. The fact that he has Scott Bessent as his Treasury Secretary tells me he understands it. And the fact that he has Judy Shelton on his, speed dial tells me he understands it. Now, is he implementing it this way? Maybe. You could argue that where we are in this time and space requires some pretty serious action, and action that would be considered rather unconventional. Survival of the fittest, maybe? I don't know.
Silver isn't just a monetary metal. It's the backbone of the global green energy transition. While investors are scrambling to secure physical silver, another battle is unfolding in the industrial sector. Solar panels, electric vehicles, 5G technology, and military applications all depend on silver. And demand is rising at a pace the market simply isn't prepared for. Right now, the solar industry alone accounts for nearly 20% of annual silver demand, and that number is climbing fast. Governments worldwide are pouring billions into renewable energy, and silver's unique conductivity properties make it irreplaceable in solar cells. Unlike gold, which is mostly recycled, silver is consumed in these applications, meaning once it's used, it's rarely recovered. Then there's the electric vehicle revolution. Every EV requires 2 to 3 times more silver than a traditional gas-powered car. With global EV production ramping up and major automakers scrambling to meet demand, the pressure on silver supply is only increasing. But here's the real problem. There isn't enough silver to go around. Mines are struggling to keep up. Global silver production has failed to meet demand for several years in a row, and reserves are being depleted. At the same time, investment demand is skyrocketing, creating a perfect storm of supply shortages across the board. And now, industrial manufacturers are competing with investors to secure silver. The same companies that dismissed silver shortages a few years ago are now locking in long-term supply contracts to ensure they have enough metal for future production. This is the early warning sign of what happens when a critical commodity becomes scarce. Prices surge, and those who didn't prepare get left behind. Silver's dual role as both an investment and an essential industrial metal creates a dynamic unlike anything else in the financial world. And as shortages deepen, the battle for silver will only intensify. But what happens when governments and central banks enter the equation? What if silver isn't just a commodity or an investment, but a strategic asset in the fight for economic dominance? That's exactly where we're headed next.
100 ounce.
Something, I'm going to pull my head down here, look at something to support, I think, to support what you're saying in a really remarkable way. I think this is what I'm going to see, but let me see. Yeah, so like right now, I mean, you can't make this up. Honest to God, you can't make it up. The bid on a Comex bar right now is higher than the bid on junk silver. It's higher than the bid on a 10-ounce kookaburra koala. It's higher than the bid of kilo silver bars. I've never seen that in my career. Never seen that. So what does that tell you? That it, you know, a kilo silver bar is 32 ounces, and all of a sudden the bid for a 1,000-ounce bar, Comex 1,000-ounce bar is higher. So, and if it's in a Comex facility, even higher still, like considerably higher, because the reassaying or the reintroduction of that Comex bar into the system is a pain in the butt. But if it's in a Brics facility that is a Comex facility, then yeah, you'll find substantially higher bids than almost anything except for like the Eagles or the Maples, which is, I can't believe I'm saying that.
While investors and industries battle for silver, another powerful force is quietly making its move: governments and central banks. For years, silver has been overlooked in official reserves, with most central banks focusing on gold. But behind the scenes, something is changing. Nations that once dismissed silver as just an industrial metal are now beginning to accumulate it strategically, and the implications could be massive. Central banks have been hoarding gold at record levels, but what few are talking about is how silver is quietly following suit. China, Russia, and India, three of the biggest players in the de-dollarization movement, have dramatically increased their silver imports in recent years. While their gold purchases make headlines, their silver accumulation is happening under the radar, often through state-backed refineries and industrial procurement deals. Why does this matter? Because these nations are actively reducing their reliance on the US dollar, and silver is a key part of that strategy. Silver has historically played a role in monetary systems, and if Brics nations or other emerging economies begin stockpiling silver alongside gold, it could disrupt the entire market. But it's not just foreign governments. The US government itself has a history of controlling silver supplies, dating back to the 1934 Silver Purchase Act and the massive silver stockpiles held by the Defense National Stockpile. While those reserves were largely sold off over the years, there are growing concerns that the US may need to rebuild its silver holdings to secure critical supply chains for energy, defense, and technology. Meanwhile, global central banks are facing a major dilemma. As the gold-to-silver ratio remains historically extreme, some institutions may begin shifting part of their reserves into silver, recognizing its undervaluation. If that happens, it could trigger a cascading effect, forcing more institutions and nations to follow suit, driving demand even higher. We're entering uncharted territory. When governments enter a market, supply and demand dynamics can change overnight. If the world's central banks start hoarding silver, just as they've done with gold, what happens to the price? And more importantly, how does this tie into the Federal Reserve, inflation, and the future of money itself? That's what we'll break down next.
Being restocked, is it a safe haven all of a sudden because of, if we believe that rumor, and they're draining everything, I mean, right now you could argue that the Comex has become the largest delivery hub on the planet. Never was that, but it is outpacing other places. We're seeing massive deliveries on Comex, deliveries we've never seen before. Now, remember, there's a difference between delivery and offtake. Delivery means it was delivered to my account and it is eligible, but it's not registered. Registered means it's for sale. Eligible means it's in my account. It is eligible to be placed into registered, but it's not. So I don't know exactly how much we've seen taken off the exchange, which would be prudent for those industrials that don't want to mess with anything. But I can tell you this gal, who's a very shrewd lady, an investor, has concerns. So if she does that mean, we'll start seeing more people and more institutions start feeling the same way, not trusting even the Comex? I'll take my bars and hold them myself because I need it for my industrial applications, maybe. But the real reason that they're not selling them is that they are scarce. Now, this will trickle down into this market. See, everyone's choking and has been for a while on inventory. And all of a sudden, that inventory will be gone just like that. And it happens every time. This is far more extreme than anything I've seen. And many of the dealers haven't reloaded. And if you can't buy maples because of the high tariffs, you've just cut off, 20% of the available sovereign product. And things can get real interesting real quick on the retail level. I'm not saying they're going to. I expect them to. They haven't yet. But if it's that hard to get and you're seeing that kind of stress on the Comex and the LBMA, it has to, by extension, filter down into the retail market and the availability of product and the availability of the mints and the refineries to make product easily and inexpensively. So I guess only time will tell, but I would expect to see that slowly and then all at once transition to retail.
As central banks and governments quietly shift their stance on silver, another powerful force is driving its next breakout: the Federal Reserve and the battle against inflation. Over the last few years, the Fed is engaged in an economic balancing act trying to tame inflation without collapsing financial markets. But no matter what they do, silver is set to win. Let's break it down. When inflation soars, real assets like silver become more attractive as a hedge against the declining value of fiat currency. That's exactly what we've seen in previous inflationary cycles. When the dollar weakens, silver explodes in value. But here's the problem. The Fed's interest rate hikes haven't eliminated inflation. Prices are still rising, debt levels are at record highs, and the purchasing power of the US dollar continues to erode. Meanwhile, central banks worldwide are accelerating their gold purchases as protection against currency devaluation. If inflation spirals further out of control, silver will follow gold's lead, and it may move even faster due to its smaller, more volatile market. At the same time, if the economy weakens and the Fed reverses course, lowering interest rates and printing more money to stimulate growth, silver still benefits. Historically, loose monetary policy and increased liquidity have led to silver booms, as investors flee fiat currency for tangible stores of value. We are in a no-lose scenario for silver. Whether inflation stays high or the Fed pivots to easy money policies, both outcomes favor silver's rise. This is exactly why major players are already moving in. They see the writing on the wall. But the real kicker? The Fed's own policies may be setting up the biggest supply shock the silver market has ever seen. While demand skyrockets, mining production is facing major challenges, and the global silver deficit is growing deeper by the day. What happens when skyrocketing demand collides with a shrinking supply? That's exactly what we'll uncover next.
Make it up. And when they call and ask someone like us, well, what's it worth? Usually it's melt or back a melt because there's no demand for it at all. It's the antithesis of the story that they're telling. And on one of them I just got recently, as I'm still looking for this, I'm sorry. They say the current value, they paid 86, the current value is 90. I'm like, listen, I said, I'm the Prince of Wales if they'll pay $90 a piece for them, or if that's what they're worth. If they are, you need to call them right now and sell them. I've never sold a 1 ounce silver coin for $90 in my career, ever, even when silver was $50. So hopefully by the end I'll find this email. But anyways, the bottom line is yes, it's really awful. And if you have contacted or have been contacted by, and it's typically in an IRA, any of the companies that have recommended 1/4 ounce gold coins for between 900 and 1,200, 1 to 2 ounce silver coins for between 90 and 150, and or proof coins, call us. I think you'll be glad that you did.
Silver demand is soaring, but there's one massive problem. The world is running out of supply. For years, mining companies have struggled to keep up with rising consumption, And now a perfect storm of declining production, rising costs, and exploding demand is pushing the market toward an unavoidable supply crisis. The numbers don't lie. The global silver deficit has been growing for 4 consecutive years, with demand outpacing new supply by over 200 million ounces annually. Silver mines simply aren't producing enough to meet both industrial and investment demand, and the gap is only getting wider. Why? Because silver mining is facing some of the biggest challenges in history: declining ore grades. The easy-to-mine, high-grade silver deposits have already been extracted. What's left requires deeper, more expensive mining operations, pushing production costs higher. Underinvestment in new mines. After years of price suppression, silver mining companies have struggled to secure funding for new projects. Unlike gold miners, silver miners operate on tighter margins, and many projects have been delayed or canceled. Government restrictions and geopolitical risks. Major silver-producing countries like Mexico, Peru, and Chile are tightening regulations on mining operations, reducing output just as global demand hits new highs. Energy costs and supply chain disruptions. Silver mining is energy-intensive, and rising fuel and electricity costs are making production more expensive. At the same time, supply chain issues are delaying equipment, chemicals, and refining capacity, adding even more pressure to an already fragile industry. And here's where it gets even worse. Silver isn't just mined by itself. Almost 70% of global silver supply comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver production is directly tied to the health of these other industries. If base metal miners cut back operations due to economic slowdowns, silver production drops even further, worsening the deficit. So what happens when this supply crisis meets surging demand from investors, industries, and governments? Prices don't just rise, they explode. But there's one group of players who desperately don't want that to happen: the institutions and banks that have spent years manipulating silver's price through paper contracts. And right now, the pressure on their system is reaching a breaking point. That's where we're headed next: the hidden hands controlling silver, and how their grip on the market is slipping fast.
I don't know if I'm gonna be able to find this letter, which absolutely I could read it. That would very quickly, I think people would understand just how bad it is. I'm looking for it, but since I started talking about that, Dunnigan, the amount of um, feedback that I've gotten from people and the depth at which these people have had their lives destroyed, um, I really can't even begin to explain what it's like. It's horrific, and I tell the story of, I have a friend here who used to work at Stratton Oakmont, which is the Wolf of Wall Street. And stories he has are pretty amazing while we're playing golf. But I said, "Did you get in trouble?" He said, "No, I left long before, as soon as I figured out what was going on." He said, "A lot of the guys that I started with, many of them went to jail." Still looking. That's why I'm not looking at you. They went to jail because they started their own shops and did the exact same thing that Jordan Belfort was doing. And so what I'm getting at is that all of these shops pretty much do the same thing. It's quarter ounce gold coins. I don't know why they choose quarter ounce, but in every single instance, almost every one, it's quarter ounce gold coins, that from mints that I've but coins that I've never heard of. And they're sold always like for between 1,000 and 1,200 bucks. Well, do the math. That's 4,000 to 4,800 an ounce. And 1 ounce silver coins that maybe look like an American Eagle, but aren't, and are $80, $90 a piece, every single one of them. And then you get the proof coins too. I'm still trying to find this email. But they're destroying people's lives. And if you've been contacted by these people, if you've fallen into that trap, certainly reach out to Dunnigan or to myself, and we can help you, tell you what to do. I would love more than anything to mention their names. I truly would. And the way that you explained it is right. Unfortunately, I'm not able to do that. I'd like to debate every one of them, the CEOs who don't have the courage to get in front of the world like I do. I have nothing to hide. I'm not perfect. I've made mistakes. I try and make it right. But what these people are doing are it's unconscionable. And these are usually older folks. And the email that I'm looking for.
For decades, silver prices have been manipulated in the shadows, controlled by powerful institutions, central banks, and massive short positions in the paper markets. But the system they've built is now under enormous stress. As physical silver vanishes and demand soars, the very forces that once suppressed silver's price may soon fuel its most explosive breakout yet. At the center of this manipulation is the paper silver market, a system where billions of ounces are traded daily, but only a tiny fraction of that silver actually exists. Through mechanisms like naked short selling, leasing agreements, and unallocated silver accounts, major financial institutions have kept silver prices artificially low despite years of supply deficits and rising demand. But here's the problem. These paper games only work when confidence in the system remains intact. And right now, that confidence is crumbling. JP Morgan, one of the largest players in the silver market, has already been fined nearly $1 billion for market manipulation. They weren't alone. Several other banks have been caught in price rigging schemes, revealing just how much effort has gone into keeping silver undervalued. More investors and institutions are demanding physical delivery. The more silver that gets removed from Comex and LBMA vaults, the harder it becomes for banks to maintain their short positions. Industrial buyers are securing silver directly from miners, bypassing the Comex system entirely. This cuts off a key source of supply for the paper markets, forcing banks to scramble for physical metal to meet delivery demands. We are watching a slow-motion collapse of the silver price suppression system. If just a fraction of investors demand real silver instead of paper contracts, the entire structure could unravel overnight, sending silver prices soaring as banks scramble to cover their short positions with metal they don't have. But this isn't just a battle between institutions and investors. Silver's price is deeply tied to the historic gold-silver ratio, and right now that ratio is signaling that silver may be poised for one of its biggest moves in history. That's what we'll uncover next, how the gold-silver ratio is flashing an unstoppable buying signal for silver, and why it could trigger the next massive price surge.
Their development, and maybe it was the best thing to happen. Pump the brakes a little bit, really solidify the way that they're going to do things. And the whole concept of a common currency, that you can put that on the back burner. You could argue gold is already acting as a common settlement currency for these nations that are trading in local currencies, settling in gold, and continuing to advance their agenda. Joint military exercises certainly sends a message, when you have these three entities collaborating, and makes you wonder, when two of the three are nuclear powers, how far behind is Iran now that they are joining in this endeavor? These are things that should be taken again very seriously. And maybe this is part of the reason why all of a sudden you've seen this, this massive shift from risk on to risk off, just like that. I mean, I've never seen such a shift from massive euphoria, risk on, everything's amazing, to all of a sudden you look at the insiders and the hedge funds that are moving away from this. It's almost like these people know exactly what is coming, just like Jamie Dimon does, just like Warren Buffett does. It's not going to be an easy transition, an easy lift for whatever Trump wants to do. And I don't think he's dissuaded these countries from continuing on their agenda, just maybe in a little bit more opaque manner, not so much in your face. Even though this is kind of in your face, it certainly, I think, is worth mentioning that, yeah, this means to me that they're still moving forward with the agenda.
For centuries, the gold-to-silver ratio has been a key indicator of when silver is undervalued or ready to explode higher. And right now, that ratio is flashing one of the strongest buy signals in history. Historically, the gold-to-silver ratio has averaged around 41, meaning that, on average, gold has been worth 40 times the price of silver. But today, that ratio sits at over 80.1, an extreme level that has only occurred before major silver bull runs. In 2008, during the financial crisis, the gold-to-silver ratio spiked to over 80. Silver then surged from $9 to nearly $50 over the next few years. In 2020, at the height of market panic, the ratio hit an all-time high of 120.1. What followed? Silver skyrocketed from $12 to $30 in months. Every time the ratio reaches these extreme levels, silver doesn't just rise, it outperforms gold by a massive margin. Why does this happen? Because silver is historically undervalued compared to gold, and when the ratio gets too stretched, the market corrects itself, often violently. Institutional traders, hedge funds, and even central banks use this ratio as a signal to rotate from gold into silver, triggering massive price surges. And this time, the setup is even bigger. Unlike past silver bull markets, we now have a global silver supply shortage, record-breaking industrial demand, a weakening US dollar, fueling hard asset investments, governments and central banks quietly accumulating silver, retail investors returning in full force, igniting Silver Squeeze 2.0. The gold-to-silver ratio suggests that silver is one of the most undervalued assets on the planet, but this won't last forever. Once the correction begins, silver could slingshot past its all-time highs, leaving behind those who waited too long. So where does silver go from here? Some analysts say $50 is just the start, but others believe silver could reach triple digits in this cycle. And if history is any guide, when silver moves, it moves fast. Up next, the final price targets. How high silver could go and why the coming breakout could shatter expectations.
Franklin in this matter as a result, blah, blah, blah. So anyways, the bottom line is this is a guy whose father worked, for his whole life and bought $800,000 worth of metal and it was worth 200,000. And so a lot of these companies will say things like, well, you'll get $10,000 in free metal. Really? Well, that's pretty easy to do when you're making, $600,000 on a $200,000 on an $800,000 order. And then they value the metal at the inflated price. So you're getting nothing for free. This is the kind of story I hear every single day since I started talking about this. And then I get the statements that they send me, which I'd love to show. I have them right here. I could show them, but I'll start a war that I really don't want to get into. I think they all know who they are if they're hearing this. And they should be glad that I have the professional restraint to not do it. Because there is no excuse, there is no alibi, there is no nothing. It's just these people are criminals, period. And the worst part about it is that they're ruining the lives not only of these people, but also the people who have worked their whole lives to have a reputation that people follow. And there are YouTubers that I like that I've told you are going down a very bad path. And they don't listen to me. Some do, some don't. I've had some come back to me and say, my God, I should have listened to you. I'm so sorry. It's real. I'm not doing this to get people to call us to buy metal. It's despicable. It's disgusting. And I'm glad you bring it up, and I should talk about it more often. But yeah, we will tell you what to say to give you a fighting chance, because you're right. They don't want to drink their own bathwater. And, the last thing they want is another complaint filed with Department of Commerce or the Attorney General. And, that's where it should begin. And it should go much further than that. It should go to the authorities who bring charges against these companies, because it is elder abuse. It is outright swindle. It is theft. And there should be some sort of regulation on how much precious metals companies can charge. I have no problem with that. The rarest thing I've ever sold, rare as hell, I don't think we made more than 8% on. When you're talking bullion, you make a fraction of that, a fraction. And so it's one of these deals where it's a sad state of affairs, and it's very real, and it looks like it's all above board and legit. And by the time you realize it, well, it's already probably too late, unless you run into someone like us who might be able to help you mitigate the situation.
Silver's last all-time high was nearly 50 per ounce. But experts believe that this time, we could be looking at something far bigger. With supply dwindling, demand surging, and the financial system under strain, many analysts are asking the same question. How high can silver go? Historically, silver doesn't just rise gradually, it explodes. In past bull markets, once silver started moving, it gained hundreds of percentage points in a short span of time. In the 1970s, silver soared from $1.50 to nearly 50, a gain of over 3,000%. In 2011, silver ran from $9 to $40 in just a few years, fueled by monetary chaos and inflation fears. In 2020, silver jumped from $12 to $30 in mere months during global economic uncertainty. But this time, the setup is even stronger. Unlike previous cycles, we now have a physical supply crisis, central banks hoarding gold and silver, record industrial demand, and an unstable financial system. That's why some analysts believe that $50 is just the beginning, and that silver could break into triple digits for the first time in history. Let's break down the key targets. $50 per ounce, the first major level. This was silver's peak in 1980 and 2011, and breaking this level would unleash a flood of momentum buying. $100 per ounce, a psychological milestone. With the gold-to-silver ratio at historic extremes and silver shortages deepening, this target is becoming more realistic. $150, $200 per ounce, the inflation-adjusted equivalent of silver's 1980 peak. If gold reaches $5,000, $10,000 per ounce, as many analysts predict, silver could follow. $500 plus per ounce? Some experts believe that if fiat currency collapses and silver reclaims its historical monetary role, we could see silver valued at never-before-seen levels. It all comes down to one thing: silver has been artificially suppressed for decades, but the dam is about to break. The question isn't if silver will explode, it's how high and how fast. But before this happens, there's one final piece of the puzzle: how to position yourself before the breakout and what investors need to know right now. That's what we'll cover next.
Read this letter,
Go
Jake.
ahead.
All right, let me just read this letter to everyone. I think it's worth reading. He's talking about one of my employees here who helped him. All right, so that's Kevin. He says, "Dear Andy, I would like to bring up an issue which was addressed by yourself on a podcast I heard. I believe it was the Health Ranger podcast, Mike Adams. You were discussing gold, silver issues and speculation that is present on every forward-thinking person's mind. I do appreciate your insight into such matters. During the broadcast, that was on roughly last September, October 2023, you brought up an issue that I was personally facing: the theft of large sums of money perpetrated on naive people, mostly individuals over 40 years in age. My father was swindled out of over $800,000 by one of these gold brokers, namely blank. They sold him proof coins for exorbitant amounts. He received roughly $200,000 in metals, but was charged 4 times more. I had contemplated violence on these people once I learned of the theft. My father worked on such projects as Air Force One, as well as the King and Queen of Jordan and many others. He designed the interior as an industrial engineer. He did a vanity for the Queen of Jordan, as well as a stateroom for Air Force One, as the office of the Secretary of State, and the meeting room for them on the plane. Every facet of what can be seen and touched, and every item of fabric, every piece of metal or wood, every curve, crevice, stitch, and crease was drawn and planned by him. I am very proud of the work that he did on all of these things. He spent his life working very hard on each task presented and gave it his all. For someone to come along and financially swindle and rape him of his work, of his blood and sweat, filled me with the wrath that, well, I brought it to God in prayer. I mulled it over for months and then heard you on the podcast and figured it was worth a chance. I reached out and you all directed me to Kevin Hauser. Kevin is an awesome guy. He worked with me on what to say. And when I got the runaround, he got on the phone on a conference call and posed as my cousin Mark. He was on the phone for a half an hour at least. He walked the guy in a circle. When efforts exhausted, he dropped the hammer and stated he would be enlisting an attorney that specialized in elder abuse and would be contacting the Attorney General as well. This was necessary verbal application of force that netted the results we needed. In short, we have reclaimed most of my dad's assets. I wanted to bring to your attention the situation that, were it not for your and wonderful efforts from Kevin working with me, I would be contemplating prison time if I had gone through with my initial desires. I do not state any of this lightly. I am a combat veteran and was involved in special operations and received more training than the average Marine does. I also have a larger than normal amount of restraint that was tested by these wolves in sheep clothing. I have no violence planned against them, but believe this serious issue should be further addressed by the authorities, and such thieves should be brought before the appropriate magistrates with sufficient restitution to those wrong. I cannot state the level of appreciation that my family has for the help Miles.
With everything we've uncovered, the supply shortages, the institutional manipulation, the return of retail investors, and the gold to silver ratio flashing a historic buy signal, one thing is clear. Silver is setting up for a massive move. The question now is, how can investors position themselves before the breakout? Timing the exact moment silver will explode is impossible, but history shows that when silver moves, it moves fast. Those waiting for confirmation from the mainstream media or Wall Street analysts will be too late. By the time silver starts breaking through major price levels, supply will be gone, premiums will skyrocket, and the real opportunity will have already passed. So what are the key strategies to prepare? Own physical silver. In a true silver squeeze, paper contracts could become worthless. Physical silver, bars, coins, and rounds, ensures you actually own real metal, not just a piece of paper. Diversify with silver miners. While physical silver is crucial, mining stocks can provide massive leverage in a bull market. In past silver booms, the best silver mining stocks gained 500% to 1,000% or more. Stay ahead of market manipulation. The big banks don't want silver's price to rise, but as we've seen, their grip on the market is slipping. Understanding how these institutions operate can help investors navigate price suppression tactics and take advantage of artificially low prices. Watch the key resistance levels. Silver's historical breakout points, $30, $50, and $100, will trigger major buying momentum once broken. When silver moves past these levels, FOMO, fear of missing out, will drive even more investors into the market. Understand the role of central banks and Brics. This isn't just about retail investors. Governments and institutions are moving into silver behind the scenes. Watching geopolitical shifts and central bank actions will provide clues to silver's next major leg up. The window of opportunity is closing fast. Right now, silver is still undervalued, suppressed, and overlooked, but that won't last forever. So the real question is, will you be ahead of the curve, or will you be scrambling to buy silver when the price is already soaring? And that brings us to the final warning, the apex of this discussion, where we lay out exactly why silver's next move could change everything. The silver market is at a breaking point. LBMA vaults are running dry. Comex is stretched thin. Central banks are hoarding gold. Industrial demand is at record highs. And retail investors are waking up to the biggest financial setup of our time. For decades, silver has been artificially suppressed, its price controlled by paper contracts and institutional manipulation. But the cracks in the system are widening. The world is shifting away from the US dollar, and hard assets like silver are reclaiming their place in the global financial order. The institutions that have kept silver under control are losing their grip. And when the price suppression finally breaks, silver won't just move, it will surge. The question isn't if silver will explode, but when. And when it does, it will be too late to prepare. Those who waited for confirmation will find themselves paying double, triple, or even higher prices as silver supply disappears overnight. This is the most dangerous market for silver investors. Not because silver is a bad investment, but because the opportunity to act is slipping away fast. The squeeze is coming. The price breakout is inevitable. And those who position themselves now will be the ones who benefit the most when silver finally shatters expectations. If you see what's happening, don't wait for the headlines. The smart money is already moving. The institutions are already preparing. The time to act is now, and remember, this is not financial advice. Always do your own research and consult a financial professional before making any investment decisions.